2022 looks to be another year of navigating vast changes in tax rules. If late-breaking tax laws were a ride at the fair, every one of us would be staggering off the ride, so dizzy we could barely stand, only to be told we need to get back on again. To help you try to plan for the upcoming year, here's a summary of key changes as we know them. Inflation is up 6.2% versus a year ago. This is the highest inflation rate in over 30 years. This means that areas of the tax code tied to the Consumer Price Index will see substantial increases. This includes tax tables, standard deductions, alternative minimum tax exemptions, earned income tax credits, and more. Instead of getting lost in the numbers, try to apply these changes to your tax situation and plan accordingly. Unless Congress acts, the enhanced changes to the child tax credit in 2021 are no longer in place for 2022. So, the up to $3,600 credit per child will now max out at $2,000. Even more importantly, if you're receiving the monthly prepayments of this credit, do not plan on them continuing indefinitely. But who knows? Congress may find the money to continue the expanded credit for families with kids. The Wild West of cryptocurrencies like Bitcoin continue to be in the IRS spotlight. In addition to noting the use of the product on your 1040 tax return, the IRS now requires crypto asset reporting by brokers, similar to those required by investment companies when you sell stocks, mutual funds, and other assets. This is being done because too many users of this product are not accurately reporting their capital gains. Think you can avoid this reporting by transferring your Bitcoin somewhere else? Nope, that transfer must be reported to the IRS as well. But probably the biggest challenge in the tax code is the uncertainty in tax law changes hanging over every home. Just looking at current bills, you need to be prepared for higher tax rates, significant lowering of the estate tax exclusion, increase in long-term capital gains taxes, enhancements in credits, and a rollback of itemized deduction limits on taxes. This limit, currently set at $10,000 for single taxpayers and $10,000 for married taxpayers, now represents one of the worst marriage penalties in the tax code. The one thing that is certain in tax laws is that there is more uncertainty than ever. As the rules change, this Tax Highlights video will be updated accordingly. Thankfully, you have an expert on your side, so check back occasionally to keep current with this ever-changing landscape.